Hello, everyone, and welcome back. I had the time of my life watching our previous keynote or presentation by Meilun. I think it was very inspiring, especially for a lot of young people who want to start their own ventures to make their change in the world. So I think it's only proper we follow up with our first panel session of the event, which is a strong contender for my favorite panel session. Just because for all of us who are interested in entrepreneurship, who are learning about the world of finance, sometimes it can seem a little daunting or a little stressful to start navigating these waters. But at the same time, how better to learn than from the experiences of those who have been phenomenally successful at it? So I have the honor of moderating this brilliant panel that brings together three experts in the world of finance that are based out of here in Southeast Asia as they share with us their journey, their lessons, and their perspective on the finance scene here right now for all of you looking to venture into entrepreneurship and finance yourselves. So our three speakers for today are Jing, the Executive Director of Trade and Working Capital and Financial Institution Groups at JP Morgan Chase & Co., based out of Singapore. She is, again, someone who has personally inspired me so much. I've seen her speak and moderate panels herself, and she is a wonder to listen to. We have also with us Justin Lim, who, based out of Malaysia, is actually the managing partner of NEXEA Ventures, a venture capital firm that, as I said, focuses on empowering ventures within the region itself. And finally, we also have Maxwell Robinson, who is the co-founder and managing partner at 84 Partners, focusing on private equity. And he's also someone who's based out in Singapore. So without further ado, let's welcome all three of these brilliant panelists onto our virtual stage, and let's get this first panel started. Okay, welcome one, welcome all. How are all three of you doing?
Hasha,
Hey, good to see you,
thanks for
Hasha.
having us.
Yeah, I'm doing
Yes.
great. It's a wonderful day.
Well, I'm very excited to have you. As you know, we have these very eager young entrepreneurs who, have just learned over the last 1 year what even is the finance industry, what even is entrepreneurship. So I was shocked this morning when we started this conference that they were eagerly waiting for each and every single one of these sessions. And now looking at all of the comments, I see a lot of them getting ready, you're sending their emojis in the chat to welcome you. So on behalf of the audience and the organizing team, thank you for spending your time with us on this Sunday afternoon. I'm very curious. All three of you are now based in a very similar region, but you have very different stories. You're from very different parts of the world. And yet you all chose finance as the industry that you want. One of the things that I personally have been hearing from a lot of the students is that they didn't even know that this is an industry that they could aspire to be in. They didn't even know that this was something that for them was an opportunity or even an option. So I'm very curious for each of you, what was your first introduction to this world of finance? You have three very different experiences. Jing, you're in corporate finance. Justin, you are in venture capital, and Max, you're in private equity. So in your own stories, what was your earliest memory of this industry? And what is your journey? What was your first step towards it? Who shall we start with? Jing, shall we start with you?
Of course, and thanks very much, Hasha, for having me. So my background was actually in political science, international relations, some business, and nonprofit. So I'm a pretty much an accidental banker, right? So I'm like, it wasn't like my choice until the very last minute. So and I went to Penn, MBA award in class of 2009. And you kids probably don't know, but that was the last great financial crisis, right? So that was a huge in the U.S. And when I went to business school, I had no idea what I'm gonna do at the end of my MBA. So I remember I received two full-time offers from the employers I interviewed for. One was a manufacturing and in large international MNC. The other one was the bank, JP Morgan, currently I'm working with. So again, I think just keep your options open, keep your thinking process open, talk to as many people as possible, and and I was going to in something we called a management rotational program, regardless which companies I'm going to work for. But obviously, I really like the experience I've had. So that was over 15 years ago. I've been with a bank ever since. I actually joined in JP Morgan New York, and they moved me to JP Morgan Singapore. So the other thing I would encourage the students and whoever is listening today is I really think the location is even more important than the function or the work you do. Obviously, we talk about work-life balance, but the location in terms of, do you enjoy the weather? Do you like the climate? Is it easy to get around? Do you have friends and family support? That's all going to play a huge part in your happiness in life as well. So yeah, I'll pass back to you, Hasha.
Oh my God, I absolutely love that. And I can feel the questions on, traveling and work and, deciding where to work coming in already. But I'll get back to you on that because, I love that you mentioned, it's right off the cusp. You started your journey right after a financial crisis, which is, one of the scariest time to be someone looking for a job or planning your future. Justin, tell us about your story. I noticed you started at least as a management trainee at CIMB in 2008 as well, if I'm not mistaken, which is another financial crisis. So I think we should rename this panel to How to Start a Career in a Financial Crisis. But what about you? Was that your first introduction to finance? And how did you decide that it was even, this industry you wanted to go in?
So my actual first introduction to finance was in about 2005. Funnily enough, I was an intern at a consulting company for manufacturing, and I happened to read a book called Liar's Poker, which is a very interesting book, but turns out to be a very poor career guide. It's exciting. It's very exciting. Liar's Poker paints finance like a movie, but the reality is, I'm sure everyone can tell you is that no. Finance is not like a movie. It's a lot of hard work. I graduated in the financial crisis '07, and what I'm about to tell you is going to be strange, but basically there was a lot of luck involved. In '07, most of you wouldn't remember, especially the ones in Asia, but things in the US and UK, in Europe was extremely bad. You have lots and lots of people just not losing their work, right? So getting a job in the UK was next to impossible. So I came back to Malaysia. I was very unhappy with it because I was sold a different dream. But, by chance, I got an interview with CIMB by just putting an application through the website. I even got my contact details wrong on my CV. But I called them and they said, well, we tried calling you, but you didn't respond. So would you want to come in? I was like, okay, sure. By chance, I got an interview with CIMB. By chance, I got into the departments that I wanted to. I spent 14 years in CIMB doing something called fixed income and credit trading. Basically, I trade G7 bonds for every kind of entity through the world. And it was very eye-opening and very humbling experience. And a few years ago, by chance, I decided to do something called angel investing, which is, looking at things out there and saying, hey, I like that company, I'm going to invest in it. A good example of angel investing is actually Google. Google got their first $100,000 investment from an individual. So I did that, hoping to find the next Google, which I didn't. But
not yet.
Maybe never. But 2 years ago, I decided that this is actually very interesting. I love dealing with entrepreneurs. I'm going to make this my full-time job, and it was all by chance.
Wow, amazing. I deal with a lot of entrepreneurs. So for anyone who deals with entrepreneurs and says, I would love to do this every day, I'm like, kudos to you. And I mean that in the best and also the during the best times and also the trying times. So on behalf of all entrepreneurs, we appreciate people like you who want to spend every day, looking at different entrepreneurial struggles and what all of us have to offer. And we'll also get back to your story a little bit more. Because I think, a lot of people want to know how those initial experiences were. I think, it's a very, interesting experience, because a lot of people also want to know what's the difference between going overseas, choosing to stay home, how do all these different factors play into their career, and how does the opportunities differ, how is the industry itself differing. And as I said, audience, I see your questions. We'll pace ourselves. We'll take them in a second. Max, tell us a little bit about you. If we stick to the theme of financial crises, I know that in 2008, I think you were, you know, I saw you a history teaching fellow at one point, and then you went into research and analytics. I'm sure you have a very interesting story behind that and behind your whole journey. So tell me a little bit about your career. At what point did you decide, finance was the industry you wanted to be in? And how did you go about making that decision? You also made a geographical pivot as well. So tell us about, what's the superhero origin story of how you decided this was the thing for you.
Thanks, Harsha, and thanks for organizing the conference, and to you and Matura and the team. It's awesome. So for me, similar to Jing, I also studied political science, international relations undergrad, and I thought I wanted to be in diplomacy. So I actually did an internship with the U.S. State Department, and I worked for a think tank in Washington, D.C. And during my internship with the State Department, I just talking to my boss, he was kind of negative on the whole, government bureaucracy, and it just seemed like to him it wasn't as meritocratic as the business world, and that kind of turned me off on it. So I realized that what I really wanted out of that international relations career, or the diplomacy career, was maybe just living abroad, and it didn't matter. As I just figured that diplomacy was the way to get that, but you could do that through business and have a more meritocratic opportunity. So I ended up working for a management consulting firm run by some American guys around Asia, and I worked for them in their Ho Chi Minh City office. I'd never set foot in Ho Chi Minh before, and I just showed up, and they picked me up from the airport, and it was like, okay, I got to work, and so that was a great experience. I worked for them, and then I just found the management consulting world a bit too academic, because we do all this work and we put together these slide decks, and then we present to the management, but we had no idea about, or at least me at a junior level, didn't have an idea about whether all that hard work was actually being listened to or implemented. And I felt like my learning curve, wasn't as steep anymore. So I got an opportunity to work for a private equity fund, which in Indonesia, some guys there had just raised $500 million to invest in Indonesia. And I think, frankly, in the US or other developed markets, that would have been totally impossible for someone with my experience to get that kind of role at a private equity firm. But I think that's one opportunity in emerging markets, is that there is talent shortage in a lot of sectors, and I got that opportunity. So that was really the beginning of my finance career. At the PE fund, there were ex-investment bankers, a lot of ex-consultants, a lot of people who'd gone to top business schools, and so I learned a ton from them. I learned a financial model. I learned during that time, I did the first 2 levels of CFA, which I highly recommend to people who want to, are interested in finance. And then I ended up going to business school at Wharton, also like Jing. So I guess I'm following Jing's footsteps to a certain degree. And then after that, I went back to that private equity firm, and since then I've worked in multiple CFO roles, and also in M&A, and dabbled slightly in venture capital. So I mean, that's one interesting thing about finance. There's lots of different roles within the finance industry that you can go into. So I guess that's my background.
No, absolutely amazing. And one thing that from all of your stories that I kind of hear is you have very global roles. And many times when people think about finance, they think of it as a very number orientated role. You have to know your numbers, you have to be able to see the details of things, which is very true. I do not want to work with someone in finance who can't see the numbers, but at the same time, do you feel the ability to understand and work with people from different parts of the world, and to understand the culture and the context and what's happening in the lives of individuals helps you as a finance professional in your own individual industries and experiences to excel in your career? Because just for context, a lot of the students that we've been working with, they come from either one extreme of, students from UPenn and Harvard and, Princeton. And on the other extreme, we have also amazingly talented students from Southeast Asia who are, from Singapore and from Indonesia and, from this part of the world here in Malaysia. And we've recently been working on getting these two groups to meet and to work together to understand each other a bit more. And what we've seen is, even though it's not easy in the beginning to understand one another, by the end of the program, a lot of them develop the ability to at least be a little bit more, inquisitive of how culture differs, to try to understand the other perspective. And I'm surprised that this is not something that, often comes naturally to a lot of people. It's something that, it takes a lot of effort to see, or walk in someone else's shoes or see from their perspective. Do you think this is a necessary skill or ability in the finance industry? And how have you seen it play out in your experiences? Shall we start the other way around? So maybe Max, you want to go first, and then we'll save Jing for last this time.
So you're talking about basically people skills, being able to interact with people, right?
Yeah, you moved halfway across the world, like on your first, management consulting role as well, like all the way to Vietnam, and that's a very different, part of a culture itself. Was the ability to communicate with someone in a different culture important at all, or does it not affect the numbers?
Yeah, I think that that's for some people. Some people like to stay close to home. We all know from where we grew up, there's people who stuck around. There's people who, went halfway across the world for whatever reason. I was one of those people that want to be halfway across the world. And, when you go halfway across the world, you got to be humble about your own, beliefs and ways of doing things, or else you're going to go crazy wondering why everyone else is doing things a different way. Right. And so it's about, being humble, knowing that there's not one right way of doing things or one right way of living. But just one, maybe from a career perspective, just on people skills, I think that if you want to bring up that point, at a lower level, it's all about technical skills, right? You got to learn, if you're in finance, you got to learn about, how to read financial statements, how to build financial projections, about the products that you're selling, about the products that you're trading. But then as you go up the corporate ladder, it becomes more about sales, right? So you're MD at an investment bank, you got to be able to pitch to CEOs of companies that hire you to, raise capital for them. So it ends up being that people skill. So some way along the way, you'll definitely learn those. As you go up the ladder, you will learn those technical skills. But at the top of the ladder, success is, maybe 99% about your people skills. So some way around the way, even venture capital, it's about building relationships with LPs. It's about building relationships with founders and being in a network. So, those people skills may not be as important at the beginning, as long as you can work all night and pound out financial models. But at the end of the day, if you want to get to the top of the game, you got to be a good people person and you got to be able to sell.
No, I like that distinction in a sense, and I think it gives people, a little room to sharpen the technical skills. But as you said, keep in mind that if you want to play the long game, those other skills, those ability to connect, the ability to pitch, the ability to sell something, is so relevant even within an organization. Justin, what about you? You had, a different career path as well, and have you seen the ability to, understand people, to those soft skills in a way, for lack of a better word, play a role in the work that you do?
So the interesting thing is that soft skills are important. My personal belief is that soft skills are important no matter what you do. So finance is one of those unique industries where the technical skills are quite easy to pick up. For example, a person could work 5 years in finance and he can pick up the appropriate skills, but you wouldn't trust a person who didn't finish medical school with, open heart surgery. But in finance, the skills are easy enough that you can pick it up as you go along, right? But what Maxwell says is 100% correct. So even if you have the basic technical skills, as you climb the career ladder, you need people skills for mostly two things. The first is the best places to work have very good people managers, right? Managing people, you can't have a talented jerk manage people, because that makes life really hard for everybody. You need really good people managers. That's number one. Number two, and just like Maxwell says, at the highest points of business, almost every decision is largely qualitative. And part of the reason is that if it was quantitative, there will always be a single correct decision, right? Like you could count it and you wouldn't need people to be there like, yes, option A is the right thing. But no, at the highest points of decision making, everything is just about, what do we think being the right word, is the right decision. And that is just people, how you sell to people, how you reach out to their emotions and see why they want to do things, and is this what they want to do. And that is in every part, even in entrepreneur's life, when you're making decisions for your team, when you're making business decisions on whether you want this investor or is this the right product to sell, it's actually a lot of people skills.
And a quick follow-on question to that. You work with a lot of entrepreneurs, as you mentioned. You invest in them. And of course, the numbers have to be right. But every good investment, like, work or is kind of built off good numbers. But it's also, at least from what I've heard, is built off, the ability to connect with the person, to believe in the founder, and to believe in the entrepreneur itself. How do
Yeah.
you go about, taking those two factors in consideration when you are, assessing founders and even working with them afterwards?
So we, this is this is really hard. I guess if you put it simply, we just see if we vibe, right? But more technically, one thing you want to look for is a person's ability to learn and adapt fast, right? You could have, I've seen extremely technical founders who are very capable in what they do, but times change, business change, and sometimes it changes really fast, and they weren't able to adapt, and things fall apart. There are many startup cases in Southeast, even in the US, where the business was not adaptable enough, and it just collapsed pretty much overnight. So founders really need to learn really, really fast. And when we see that in a founder, and of course, if we vibe, then yeah, we tend to make an investment.
Okay. I really do like that, because that's the entrepreneurial skill that I think separates a lot of people from being able to make it as an entrepreneur, and not for many of us who don't have that kind of edge to get stuck in an idea or stuck in a project and not pivot fast enough. So I think that's one of the things that I believe makes or breaks a good business or good entrepreneur. So I really like how you brought that up. Jing, for you, in a way, you work with so many people at such a high level that you have teams to manage, you have teams, at every level. For you, how important was your own career, to connect with people, to understand people, especially because you also made a big move geographically? And how is it important today when you manage people on the flip side, in a way?
Sure. I think first, from kind of the audience perspective, we have students mostly from Southeast Asia region today joining us. I just want to emphasize, you guys are not going to have any problem working with diverse backgrounds and work with each other across teams. I manage analyst associates that we go to school, recruit as well. The best team player actually coming from the very diverse kind of Southeast region, because growing up, you're already exposed to a lot of the different cultures, religions, backgrounds. So no issues at all. You guys are going to be very aware of the team culture, of how global company, working with people with different backgrounds. The part that, if I have to compare with the Southeast Asian kind of growing up, versus maybe North America, even UK, this kind of backgrounds is you're actually very confident, very good at what you do, and you know your stuff very well. But when it comes to kind of communication, the way you present, those softer skills are actually very, very important. And especially if you're in front of a large panel, if you're presenting to a senior management, if you're presenting to a client, if you're working with people externally. And opportunity as this, right? Like speaking on a panel, organizing a student activity at your school, go speak to some people you never talked to before. How to really create a rapport, how to read the room, how to be able to present the materials in a very relevant, capturing way. Those things cost for a lot of practices, and you can learn. And those are, there are a lot of tips. But the thing is, you need to be able to communicate and present your skills and your material and your information in a very impressive way. And Harsha, obviously, you stand out in terms of excellent leadership and organizational and presentation skills. But overall, I feel like if I have to compare the analysts or associates coming from more Southeast Asia background, it could be because English sometimes is not our first language, and just because we feel like sometimes we have to compete with the other native English speakers to have our voice heard. That is a challenge, but also be very aware that could be your competitive advantage as well, because nobody knows about Southeast Asia, about Asia, like you guys, right? So have that confidence, have the trust, just go out there and present and share. And if you come into the room, you own your material, you know your audience, and you're be able to communicate in a very related way. And you will, although you're young, you might be the most junior person in the room, you will be able to present your value and bring additional things to the room, to your audience, to your senior management in ways that nobody else can.
That is very beautifully said. I remember the first time we met, Jing, and you told me something like, you make sure that whatever you say with confidence, in a sense, because there's a tendency, for a lot of us, like kids who grew up in Southeast Asia, that we always try to be like, oh, I have to be humble. I can't say directly what I want to say, in a sense. I have to, pretend I know less, or not even pretend I know less, but always think that you know the least in the room, which is of course helpful and great. But I remember you said, no, if you know something and you know that's your expertise, make sure you're confident about that, and make sure you let people know that this is your area. So I remember that advice, because every time I go for a meeting now, especially when I meet people from North America, I'm just like, okay, Harsha, remember, you have to be confident, show the confidence, in a sense. So I appreciate that advice. I think
Harsha, you have no problem with that. that was a value add tip, but you have no issues with that at all.
But it's good advice. I think we all struggle with it. I'm very curious, in the finance industry can seem like a very competitive place in a way. A lot of people are always looking at, okay, how do I, progress my career? It's also very high pressure for a lot of people, because, your decisions have real world consequences, especially when you're investing at the private equity level, at the corporate level, even at the startup level. I argue these decisions that you make have a lot of power to influence the lives of others. And I would like to think, you're all human. So there's, some amount at least of, concern or, it kind of analysis that goes into it. But at the end of the day, how do you decide when you're investing or when you're looking at, a client or a set of products? What are the metrics or what are the things that you look at that maybe aren't, the things that we can learn in a textbook? Because I know a lot of the kids in the audience, they read a lot of these financial books and they think, okay, if I had to make an investment decision, I would do this, this, and this. But what are the things that we can't learn or that you've learned in experience that you take into consideration today? Justin, do you want to start us off?
Sure. So I think my answers will be quite unsatisfactory because it's very uncertain. When we look at startups and founders, we look for two things. One, again, like I mentioned, is the ability to change their mind, right? When there's evidence contrary to what they believe, right? And that's not exactly set in stone, because on one hand, there is always the story about the founder who keeps trying and suddenly it works. And on the other hand, you have the founder who keeps changing their opinion that they can't settle on a single product. So we have to find something that is nice and in between. So that's the founder bit. And the second one is actually the questions we ask about ourselves. Like you mentioned, a lot of investing, you can get it from textbook, right? But what sets aside, I would say, better decision making is sort of thinking about thinking. So, when we look at a set of industries or startups, we have to ask ourselves, what assumptions are we bringing to the table, right? Or are we thinking about this the right way? Quite often when you're dealing with startups, they tend to be in industries you've never seen before, or looking at problems you never thought were problems. And you have to ask yourself, like, hey, am I looking at this in a correct manner, because if you bring the wrong assumptions and the wrong tools to the table, that could be very problematic for everybody.
No, I agree with that. And Max, I'd love to get your thoughts on this as well. You deal with companies at a different stage, not often startups, private equity, larger organizations, a lot more traction and a lot more momentum. What is kind of the thought process that goes behind your decisions? And when you are, looking at, again, company statistics, individuals who are behind the company, and all of the 101 factors that go into making a decision like this.
Yeah, sure. So yeah, I mean, for Justin, as you can see, it's really they're betting on the founder to a certain extent. Of course, the market has to be big enough and whatnot, but it's really a bet on the founder because you don't have many metrics in venture capital to assess, right? But private equity is very different. It's a established business, and there are financial results that you can see, and then you can project those forward, right? And I mean, of course, this is something from the textbook, but it's something I always try to keep in mind in finance, especially corporate finance. It's like, what's the value of a company or the value of any asset, right? It's the net present value of the future cash flows, right? So that means you're discounting the future cash flows. So if you think about that, it's, if it's a private equity, if it's an established company, that ends up you can build a DCF, discounted cash flow model, and then you can make some assumptions. But like Justin said, it's important that those assumptions are reasonable. There's another quote that, a saying in doing financial modeling, it's like garbage in, garbage out, right? So if your assumptions don't make sense, then your outputs won't make sense, right? So it's getting the right assumptions and keeping in mind that the company's worth and net present value of future cash flows. And then I guess the final thing I'd say is that, like, in investment world, you want to be contrarian but right, because if you're buying what everyone else wants to buy, then people are going to bid the price up, and your returns, it's going to be basically your returns going to be, I guess, equal to the risk-free rate in theory, right? So, and that's not going to get you a 10x on private equity or 100x on, venture capital investment. So it's like, what's the contrarian take on this, and is it right? And if so, what's the asymmetric upside? So you want to have an asymmetric upside with respect to downside, and how can you get to see those opportunities?
Okay, contrary but right. That's hard. That's harder to implement, but I'll get that on a t-shirt. Okay, contrary but right. Okay. Jing, what about you?
I'm more on the sales side, so I wouldn't have as many insights like Justin or Max. But I think from an investor perspective, we probably only going to invest in the things we understand, right? We're not going to invest in the business or the countries or the industry that we do, or business model we don't understand. I think that's like, even we buy stocks. I think this was Warren Buffett said he will only buy the companies he understands the business model, and if it's consumer goods, you wouldn't mind using the goods yourself. So that's straightforward. But from an entrepreneur perspective, I can imagine you want to be passionate, you want to be committed, you also need to be consistent, and also be genuine, authentic, right? So you don't want to pretend you're somebody else when you go pitch to investors, because the business is gonna, your words and your reputation is gonna be very important in that community going forward. So yeah.
Oh, it's very nice advice, and I think all the young entrepreneurs now who are planning out their they're learning the finance part, they're implementing that. But I think this is a good reminder that who they are and their passion for it matters. Speaking
I
of them,
think a lot of this stuff we talk about, it's not just in finance or at work, but also applies in life as well. So in the long term, right, the authenticity really comes out. And even if you are thinking of going to a finance, you want to work for a company or industry that's really aligned with your personal value and what you're looking for as well, because in the long term, and that is the investment, because you're working in a certain industry or company, and you're not again, that's a sunk cost. You're not going to have time or experience in the other industries. So be careful about what you choose to do, because that means that that's your opportunity cost there.
Ooh, opportunity cost. It brings out the economics, to life in a way. Well, if any of you want to write the book Economics to Life, I definitely write read that. But to kind of go into some of the questions we have, specifically about the finance industry from our students. One of them asks actually a little bit about, what do you think the current state of the finance industry is with, all of this AI innovations happening? It's affecting every industry. So they want to have a little bit of insight of, is the finance industry in any way affected by this? And also at the same time, is this the right time to be getting into finance? We spoke a little bit, about financial crisis earlier. So what's the kind of current take? So shall we start off maybe with Jing this time?
AI is not going away. AI is staying, and AI is going to be supporting us and make our business more efficient, and make supporting the humans be better and smarter. I'm actually overall very optimistic and positive about AI, to be honest. But a lot of this investment right now is still on the middle office and back office in terms of client facing, in terms of business opportunity facing. I think AI will never replace the humans and the business judgment and decision. It will help us to make better decisions. Definitely happening across a finance industry, especially when we're dealing with a lot of data. Because you guys think about financial services, by the end of the day, is we deal with information, we deal with data, right? So that's essentially what how AI is going to come into play. And if the question is this a good time to be in finance? My answer to that is it's always a good time to be in finance, but because
as long as there's money,
yeah, finance by the end of the day is really a industry or service industry really facing across different countries, different regions, and different industries, and there's always going to be opportunities somewhere in the world, somewhere in an industry. So we'll always be able to support and facilitate a lot of the development and progress in these industries.
I like those answers in a way. So, always a good time. And with AI, maybe even a better time now to get into finance. Max, what about you in a sense? Tell us, okay, 2 questions again. AI, how does that affect the industry, and also the timing of the industry right now?
Yeah, so AI, I mean, if you step back and think about what the purpose of the finance industry is, it's really to allocate capital, right? To decide in the economy, where capital goes and what academic or what economic activity gets backed, right? Whether it's venture capital, private equity, public markets, right? And so I don't think that capital allocation is gonna be done by a AI completely anytime soon, right? There's gonna
Hopefully
be
not. Yeah, as you said, that may bring in the concern of the heart surgeon who doesn't know what they're doing. But yeah.
Yeah, so there still has to be humans, one, like making decisions, and two, like Jing mentioned, like humans have to be out there interacting with each other, advocating, selling, right? So the AI is not going to replace, but it's going to be a tool. And if you want to be at the top of your game, you got to figure out how to leverage AI to make yourself more productive, which is really what it is. Otherwise, you end up getting left behind, right? So that's AI. And of course, on the time, like finance industry, markets go through booms and busts, right? So I've actually been more active in venture capital recently. I work for a US-based healthcare startup right now as a fractional CFO. I also work as a venture partner, and I work in operations for a Singapore-based health tech fund. And it is challenging in venture capital at the moment with higher interest rates. Like we talked about, the value of an asset is the net present value of the future cash flows. And when interest rates are higher, that means that net present value of any dollar in the future is less. I mean, that's just mathematical, right? So I think, big LPs have been allocating been potentially allocating less to the space in certain cases. So it makes it challenging, right? Of course, there's a lot more money going into fixed income. So maybe if you're a fixed income person at the moment, that's an exciting place to be. But I think big picture, or maybe not.
Just like no.
Yeah. So, I mean, there's always sectors. Again, it's all about the function of it. It's about capital allocation, right? And there's always capital. It always needs to be allocated. And it's the question about where you want to be positioned in that capital allocation machine. And that really is based on, your individual preferences and what you end up liking and being able to excel at.
Oh, that's a very good point, because I think as an entrepreneur you always hear the things like it's a bad time in the markets right now, like you shouldn't be raising, you should, like everyone says that, but when you put that into perspective, money's kind of like energy. It's neither created nor like destroyed. It's always going to be somewhere. You just kind of have to go and figure out where it is if you want to follow the industry. So okay, that's a very good point. Justin, what about you? You again to the point where a lot of people are saying it's not the best time for venture at the very least. How do you view the timing? And of course, please do talk to us about the AI part, because I think a lot of our students would love to know about that as well.
So the timing, I've been in fixed income for a while. There has never been a good time to be in fixed income for the last 10 years. It's like everyone's complaining that, oh no, the rate of return we're getting is way too low. There's no point being in fixed income. But it's been that way for more than a decade. So I think broadly speaking, there is never a good or bad time to be in a certain space, and that can be any space, in industry or in business. It's just about identifying what you can be doing in that space. So, for example, in fixed income, right? Like, sure, rates are going up. So on the sell side, a lot of market makers are saying, we can't make money or the volumes are terrible. There's a lot of investors saying that, hey, I'm losing, like, because yields are going up, so bond values are going down. We're losing a lot of our investors' money. This is not great. But there is a segment of very savvy investors going around and saying, hey, some of these bonds are 10+% yield. Like, 10+% yield is fantastic for the risk that we're taking. We should totally be doing that. US mortgages are 8%. Thus, historically in the last 15 years, is 8% good? Yeah, actually in the last 15 years, 8% is really good. So if you can log in 8% for 15 years, why not? So there's going to be opportunity somewhere. You just need to be savvy about it. Now, in terms of AI, I think we need to touch on it from 3 different perspectives. One is productivity. AI is a great productivity tool. I'm a little more sanguine about the prospects of AI because I tend to liken it. Well, what is artificial intelligence? Artificial intelligence is anything that we find cool at the moment, because in 1944, when they had the Turing machine, they were code breaking the Enigma machine and Bletchley Park. That was artificial intelligence, but once we understood that, it was like, yeah, it's just another machine. When the first calculators came out, I was like, oh, it's so cool. It adds all these big numbers, but then it becomes understandable. It's another tool. AI right now, it's in that phase. Soon it just becomes another tool. The second part is so we do use it a lot for productivity. In-house, we build a lot of apps that just streamlines, when a startup makes an application, where does it go to, who gets to see the slides, when the analyst summarizes it, where does it go to? When we do video calls with the founders, there is an app in the background recording everything we say and summarizing the entire meeting. It's fantastic. So productivity is great. Decision making. AI helps us summarize a lot of data very, very fast. Right. Previously, you need a data analyst to spend like half an hour just like cranking things out. No. Nowadays, you can get Microsoft's stuff to crunch out the analysis for you. It's great. But finally, the one that I think I want to touch on is what you call emergent properties, right? Like, actually, we don't actually know. Like, there are certain things that emerge from new technologies that is completely unknowable. and we're always keeping an eye out for that as users of technology. And I think I want to be humble about it to say that we don't know what we don't know. So, but all in all, very positive. I love all this extra productivity.
I mean,
yeah, but in the history of human, now AI are the tools are smarter than human now, right? So it's, we're the first time in human history we're going to be using tools that are smarter than us. So I agree with Justin. We don't know what we don't know at this point, but I'm still very optimistic, being me.
I mean, I think it's hard not to be optimistic when you have something that helps you in your day to day that you can use as an individual without having to be necessarily a machine learning expert. So I think it is easy to use. It's easy to get a little bit more productive at work, and it's easy to see the possibilities of where this will take us in time to come. So I'm very optimistic about the future. To wrap us up in a sense, maybe we can talk a little bit about where you see the future of finance going. We have questions in the audience that are still talking about everything from their individual journeys to things like crypto to AI and so on. So there's a lot of conversations happening about the finance industry. Not all necessarily applicable, but in your individual experiences, where do you see the future of this industry going? And to everyone who wants to get into it, what's your advice? I see all the deep, I've got to get the advice, the best advice to the students. So who wants to start first? Max, would you like to take us away to the end?
Sure. So I don't think I have anything so profound to say about the future of the finance industry. I mean, it'll, at least for the next few years, it'll probably be pretty similar to how it is now. So I'll let Justin and Jing say something more profound about that. But what I would like to say in closing is that just a bit of a caveat or warning to people is like, I mean, you listen to us talk about our careers, and we may have had awesome careers and love it, and that doesn't necessarily mean that career in finance is the best fit for everyone else out there. Because I think that I've blindly followed advice about from other people, and even people who have an amazing career in finance. I mean, I've read Liar's Poker as well, like Justin mentioned, fantastic book. It's like, I want to be that guy in Liar's Poker and trade bonds and make a bunch of money, right? And I think that the like cognitive bias there, or the logical fallacy, is to assume that that person's values and traits and what they want in life are consistent with my own, but they may not be, right? I'm everyone is very different, and I might be someone who would do better in medicine, like a caring profession, or maybe I would be better in it as an engineer to like build something, or maybe I care about like social change and I want to go into politics or nonprofits or something like that. I think that people can thrive and prosper and have a fantastic career in finance, but there's also people who are miserable in finance and either stick it out or don't stick it out. So what I would say is, like, the point is you got to know yourself, and that's hard. But what I would suggest is, like, everyone should be doing, like, do an MBTI test, do a Clifton Strength Finder test, do an Enneagram test, like, go meditate or do some sort of journal writing, and understand, ask people, like, what they think you do really well, and ask yourself, what do you do in your free time when you don't have anything to do? Are you looking at the markets? Are you thinking about, investing in companies, or are you like thinking about something entirely different? And, if finance doesn't interest you, then I would caution you against going into it with a blind eye, unless it's just you say, hey, finance is a career where, the median person probably does much better than the median artist. So I want to go into it as a more safe career, and that's fine. But just realize that. So anyway, in summary, know yourself.
So don't read a good book or watch, The Big Short and think like, oh yeah, I could go into finance. Okay, so actually understand yourself. Got it. Okay. Jing, what about you?
I've been working in something we call it like high finance. So basically, I deal with all those large institutions, corporate, the largest kind of organizations in the world. I think for me, I probably want to eventually go into something called microfinance. So like SME, kind of a smaller business financing that I feel like I will be able to support. But again, the future of finance, I think, is going, the large scale financing is still going to happen, right? Continue. The deals are there, the requirements is there, and a lot of the stuff that I've been working on, especially on the ESG front. If you want all these transition happening, the governments, the regulators, the international organizations all have to work together because those are large scale. That said, even on a micro level, if you guys didn't know, on the kind of solar panel, that science and technology is so mature that individual families and houses, we can actually convert our homes into a solar panel powered, energy powered units already. So it's already there. So I think going forward, governments and regulators are still going to be working together with financial institutions, entire financial services, to drive a lot of the macro changes. But on the micro level, there are going to be a lot of positive changes that happen because we see these technologies, these science now enable smaller companies, individuals, to make a lot of positive changes. So I'm, again, I think with technology evolve, we have the capacity and power to improve on a neighborhood, in a city. We can do a lot of things on micro level.
No, I love that. I love the beautiful picture it paints. And I think all of us want to do good. But sometimes, if our skills align, we're like, oh, how do I use my finance skills to do good? So I think this really gives us a good path forward. Justin, to end us off in a way, thoughts for the future and your advice for students who are, interested in the field.
Oh, wow. I'm a little pessimistic on my ability to predict the future. So I'm going to say that, I don't know the future. All I do know is that ultimately people are still going to be involved, right? Like we've had algorithms, say for example, in fixed income in equity markets, we've had people saying the algorithms will take over 20 years ago. In fact, 26 years ago, they said that the algorithms were going to take over, and then you had long-term capital management, which almost blew up the entire world's financial system. Right? So people will still be involved, but we don't know how things will be in the future. So it's kind of unknowable. And also, just to bounce back on what Jing said, when you were just before this call, we are working on with one of our startups to fundraise precisely that micro solar. They've what a coincidence. They're like 64 times growth in the last 3 years. So you're 100% right. It is a very good segment. And for students, now this is going to sound really harsh, but you just got to go and experience it. Experience it and see whether you like it. How do I put this? You might feel like if you want to commit 5 years to a career, it sounds like a long time. It really isn't. When a lot of the graduates I work with, when they tell me that, oh, I can't imagine, I can't imagine working in a single place for 5 years. But the shocking thing is that if your career is measured in decades, working 5 years is just a taster of what it could be. The best thing you can do for yourself is figure out what you like. And how do you figure out what you like? By experiencing it. Try the different ice creams. Maybe you don't like mocha, maybe you like green tea. And then if you like green tea, keep eating green tea. It's as simple as that. But it takes time. I think that's the downside. But what is life but time?
I don't think that's harsh at all. I think that's a very nice note to end it on, because I am personally someone who believes, the more you experience, the more clarity you get about yourself, if not anything else in the industry. So thank you so much for ending us off on that. And thank you to all three of you for such a deep panel. Oh my goodness. We started off in finance, but this was a very life reflective panel. So I appreciate, the thought and the care and the experiences that you shared. And thank you so much for making this summit all the more richer by your presence. I really appreciate it. And we'll hand it back to the MCs to continue our 48 hours. We are not gonna sleep for the next 48 hours. And our audience, you'll be with us, right? For the next 2 whole days straight. So let's end today's panel. Really
Thank you so much, Harsha. Jing,
Maxwell,
Maxwell, when I'm in Singapore next time, we should get coffee.
Let's do that.
Sounds great. Bye, everybody.
Bye.
Bye.
Thank you. Bye.